Hello and welcome to another Major Market Movements End of the Week Market Review for July 3rd, 2015. I'm Quad G, and in this video we're covering the PM complex, starting off with gold. And this is a daily chart, and I wanted to point out how over the last several months, going all the way back into late 2014, you can see that the price action has been contracting into a tighter and tighter range-bound movement. And it could be this is not finished yet, and we've got some more chop to ahead of us into, I think, the August time frame. As you can see that these two trend lines, competing trend lines, come together right here in August. So I suspect that we could see a bounce off this lower trend line here fairly soon, and then bounce up again to test this upper trend line. And it could be that, typically in these doldrum months through the summer, we could see this action just continue to be choppy and cram the price right into this tight corner between these two trend lines all the way into August before we see a significant move. Yeah, it could break north, it could break south, but I think that the month of August is going to be the time that we could see that decision in the market. There is, and we'll go into the Elliott wave count here in a moment. Let's move on to the QG3, and you see we're still in a bearish alignment here, still closing below the 3 EMA there, or right at it. So it's still looking bearish in that department. The gold on the weekly, we close lower almost underneath last week's intra-week low, so that's looking bearish still. And the EWO, nothing to see there as we're still very close to the zero line. The RSI here, we see that we did get an incursion below the 40 level, so that tells us that that level is weak and could allow for the price to move down even further towards 30 or even 20. And gold on the MACD is open to the downside on the daily, and on the weekly we ticked lower this week, and now we're open to the downside on the weekly as well. So overall bearish picture for gold, but it'll be interesting to see how the price action deals with this trend line here in the days ahead. Let's move along to silver. I got a bunch of old trend lines on here I gotta get rid of. Okay, so silver on the daily, we don't see any significant turnaround here just yet. We do see a couple candles with some long shadows, but nothing very significant on the daily time frame yet. There is, of course, this trend line here that's been tested 1, 2, 3 times now, and it's possible that if we get a break above that trend line, we could get a rule of 4 breakout short squeeze to the upside. So very key trend line there right now. Bearish below, bullish above. The the QG3 is still open to the downside there. Closing, the day's closing right at the 3 EMA. And everything is turned down. The 20 and both Bollinger Bands are still aiming to the downside, so that's all bearish there. And silver on the weekly, not particularly bearish. We didn't close underneath last week's low, but nothing bullish there either. And silver on the daily, EWO, we do have, no, we don't have We just slightly below there. So we can't say that we have a positive divergence there at this time between these two lows. And on the RSI, the price, the oscillator comes down and is currently testing the 30 level. You can see back here and back in March of 2015, the 30 level, or just slightly underneath it, did provide support for a bounce. I wouldn't be surprised if the 30 level provides a place for a bounce here as well. But I think we're going to have to wait at least a few more sessions to see that happen. And silver on the daily, MACD is still open to the downside on the daily, and weekly we've ticked below also with a bearish alignment to the downside as well. Let's take a look at platinum. Overall picture for silver is still looking bearish. For platinum here, I think there is a possibility that we could see platinum recover a bit, though I don't know that it will go far. This trend line above here, I think, is going to be a key level of resistance, and that's currently above there at about 1128. So if the bulls do get any traction here, I think it'll be a fairly short jaunt up here at about 1120, 22 or so, and then possibly another rejection from that level again, and another push down is what I would suspect to take place here shortly. The QG3 was in a bearish alignment. We've closed it out though. We're now neutral with the 3 EMA closing right at the 10 EMA, just underneath the 20 DMA though, which is still providing some resistance. Bollinger Bands are still aiming to the downside. Platinum on the weekly, we do get another, well, you can call that a long-legged doji, I guess, on the other side of a hammer candle last week. So this is producing what could be a hairy bottom with these sharp drops down, but recover back up to where they started pretty much. So we could be forming a bottom here, though it's not quite confirmed yet. And we've got this double positive divergence in the EWO. That's another reason that we could be seeing a bottom here as well, is we've got the support here in the oscillator, the double positive divergence. And the same thing with the RSI, got the double positive divergence here too. We got lower lows in the price, but higher lows in the oscillator. That's letting us know that the downside is losing momentum and could be turning around here fairly soon. Platinum on the weekly, MACD, we're still slightly open to the downside on the weekly, and on the daily, we're open to the upside. So mixed picture there. I'd say overall, platinum has a fairly good chance here that it could, if it can get a daily close above the 20 DMA there, it could ignite a short squeeze up to maybe 1110, the upper Bollinger Band, or maybe even 1120 or so. But that's going to intercept this trend line here, which is a very important key trend line, from which I think we could see another rejection and a push again to the downside. All right, let's take a look at the Elliott wave charts. Go back here to gold. All right, so gold, again, we were talking about those trend lines, and this one's just purple and orange here. So I suspect as long as we're above that purple trend line and below the orange, I suspect while we're in this summer doldrum period that the price is just going to chop around here erratically, and it's not going to provide very good trading opportunities. So I think it's best for us just to be sitting on the sidelines for the most part, and I know it's kind of boring, but I think it's better than trying to chase these price movements around and just getting stopped out for nickels and dimes. So I think that's the best course of action going forward into August. Of course, if we get a solid break below that purple trend line, that may suggest something entirely different, that we are going to see a sell-off, a stronger sell-off down um, towards the 1100 area or even sub 1100. And of course, a solid break above the orange trend line could ignite a short squeeze higher to come up here and test that blue trend line, possibly a fourth time, which of course invites a possible rule for breakout to the upside. So again, a very tedious and boring period of time here, but once it's done, then I think we're going to see some interesting moves, some strong trends that could be profitable. Let's take a look at silver. So this is my primary account right now, looking at this bearish triangle. It seems out of all the permutations that I've done using Elliott waves, this one seems to make the most sense. But the qualifier for this particular account is that the price has to stay above $15.27 for now. And if it's true, we need to see a three-legged move up fairly soon to come up here and test at least a 50% Fibo of wave D down, which would be roughly around $16.60. Possibly move up even to the 61.8% Fibo, and there is an outside chance that it could come all the way up to test the blue trend line. That's another possibility for the completion of wave E. Now, typically in a contracting triangle, no matter which market, wave E seldom ever tests the upper trend line of the triangle. It usually is truncated. It stops well below that line before it dives down. So my expectation is the most you might get out of this is maybe 1690, and then a reversal would be my current suspicion. I wanted to take a longer term view of GDX again. I do think there was a significant wave one top that was put in back in 2008, and then we saw the crash in the market, which drug GDX down, the miners down with the main market into the latter part of 2008, which was a sharp correction for wave A. And then we got this long, what I don't have it labeled here, but it was I counted it as a triple zigzag to the upside for wave B, and now we're working on this move to the downside. Now into wave C of 2. Now there's a couple different ways of looking at it. This certainly could be a 3, 3, 5 type of correction. That's certainly possible. Or it could just be another complicated triple zigzag. That's another possibility. I'll zoom in on that for a moment. But I also want to point out that oftentimes when you're looking at corrective patterns, I notice quite frequently that if wave A is sharp to the downside, wave C is oftentimes softer in its approach to the end of the wave. It's not as sharp as wave A. It's just kind of its own way of alternating modes, I think, between the two moves. And I think that we're definitely seeing that demonstrated here in this market with the price is certainly coming down. It's certainly bearish, but it's not as radical as wave A was. It's definitely very soft and a mellow approach to the downside towards its completion, which I think is coming up. There's a couple different ways of looking at it. So in the orange count here is the triple zigzag count. That's certainly very possible. And if it is true, wave C to the downside, zooming in here real quick, is wave C to the downside could be finishing up roughly in August, September possibly. And then if that's true, we should see a sharp move higher and take out the top of this wave B. And that high is at 21.25. However, there's another count. It's certainly very possible as well. And it's a five-legged move to the downside. And it starts all the way back here with a wave 1 to the downside, an ABC sideways move for a wave 2, and this would be a flat correction for a wave 2. And then this wave C would actually be a subwave 1, pop up here into subwave 2, and then wave 3, a sideways wave 4 in a contracting triangle, wave 4, and then a wave 5 down to complete wave 3. And then wave 4 alternated with a ABC up, which is a sharp correction, which alternates with the wave 2 flat correction. So that makes sense. So if that count is true, then wave 5 needs to see five waves to the downside. 3 legs is not going to be enough. It has to be 5 waves. So that would mean that we've got a wave A, a wave B, which looks sharp. We would still be working on wave C, and then if true, we would need to see a lazier move to the upside, preferably only 3 legs. It may be very choppy and sideways as a flat correction, since this wave B or wave 2 here looks sharp, so it might be an alternate with a flat, wave 4 possibly, and then a final fifth to the downside later on, sometime in 2016. It's a long time to wait, I know, but I'd have to say that's certainly still a very interesting possibility. And I don't have it here. I'm going to go to another chart. Bear with me for a minute here. I want to show you something else that's very interesting. We got GDX. I'm going to go to a monthly chart. And all right, so this low here in wave A here, that low was in October of 2008, and it topped out in basically September of 2011. So just shy of about 3 years, all right, by about 1 month was the advance to the upside in wave B. All right, so if we take a Fibbo time measurement, we'll call it 35 months, and we take, so this move to the upside was 35 months. We take 35 months and we times it by 1.618, which is a very common measurement for Fibbo retracements, whether it's in price or in time. And wave C to the downside could take, if we take 35 months times 1.618, we come up with about 56 to 57 months, all right? And currently, right now, okay, so 35 months times 1.618 comes up to about roughly 56 months, 56 to 57 months. And that roughly translates to about 4 years and 9 months. And so if you take 4 years and 9 months from the September 2011 high, you come up with a potential target for wave C and time-wise at roughly about June of 2016. So that would work out just fine for this 5-wave count to the downside to end up in roughly around June. Let's see if we take it. Here's May, June, roughly about June here. That might complete wave 5 somewhere in there, and that would probably be a major, very major bottom, possibly a generational bottom before a major wave 3 to the upside. All right, so we'll just have to wait and see how the attitude plays out in these markets. Again, for this long-term count, the top of this wave B here, which is also a possible wave 2, is super critical for this count, for the longer term count here, and that's currently up there at about 21.25. So while we're below that level, there's still the potential of a further slide all the way into about mid-2016. So we'll just have to wait and see what happens. All right, so that ends our coverage of the PM complex for this week. I hope you all have a great weekend, and we'll be talking to you later. Adios.